So Netflix spent months chasing Warner Brothers, Discovery, walked away, and their stock went up.
$79 billion in debt, Nate. That's why.
Paramount just paid $170 billion to own two struggling streamers and a mountain of obligations.
The projected $6 billion in cost savings sounds great until you realize that's basically just we're going to fire a lot of people.
Bold strategy.
And somehow the losers in this deal are the ones celebrating.
Hollywood is cooked. Let's talk about it. The rundown.
Okay, $33.4 billion. BlackRock, EQT, CalPERS, Qatar Investment Authority. They all just showed up to buy AES Corporation together like it's a group project.
A very expensive group project. That's one of the biggest energy infrastructure takeovers of the year, and it happened quietly enough that half our listeners probably missed it.
Because everyone's staring at the Paramount WBD supernova. Which, fine, we'll get there. But AES is the deal that tells you where institutional money is actually going. Defensive, long-term, real assets.
Boring is back, baby.
Boring is extremely back. Meanwhile, Quantum Computing Inc. had dropped $110 million to buy Luminar Semiconductor, and now they're calling themselves a vertically integrated photonics and quantum computing platform.
That sentence has 4 buzzwords in it.
5 if you count vertically integrated.
Fair. Look, I'm not dismissing it. The buy and build logic is real right now. PwC flagged it as basically the dominant playbook of 2026. Snap up the small complementary piece, bolt it on, move fast.
$110 million is small in this market, so sure.
Speaking of semiconductors, Denso making a run at Rohm Co. That one I did not see coming.
Automotive components giant wants a chipmaker, because apparently the lesson from the last supply chain crisis is never let someone else control your chips again.
Which is just Toyota's philosophy applied at the component level. Honestly, respect it.
And Rome's board hasn't formally responded yet, so watch that space. Now, the macro number that's haunting me. Deal volume is down 22% year over year, but mega deals above $1 billion, up 57%.
Fewer swings, bigger bats.
Exactly. The little deals are dying and the monsters are multiplying, which actually explains everything we're about to talk about, because nothing says monster deal like a $170 billion media merger with $79 billion in debt attached to it.
Oh, Paramount and Warner Brothers Discovery? Yeah, that's a whole episode.
That's our whole episode. The big one.
So, 170 billion. I need someone to say that number out loud a few times before it feels real.
$170 billion. And $79 billion of that is debt they're just carrying into the marriage.
It's less a merger and more two people combining their credit card balances and calling it a fresh start.
That's exactly what it is. And look, the $6 billion in projected cost savings sounds impressive until you do the math on how long it takes to dig out from $79 billion in debt with $6 billion a year.
13 years, roughly.
Assuming everything goes perfectly, which in media it never does.
Okay, but here's where I'm going to push back a little. Because strategically, combining HBO Max and Paramount Plus actually makes sense to me. You've got two platforms that are both hemorrhaging money trying to compete with Netflix individually. Together, maybe they stop the bleeding.
Or you've got one bigger platform that's still losing to Netflix, but now with twice the debt and half the organizational clarity.
Fair.
And speaking of Netflix, this is the part I can't stop thinking about. Netflix spent real time and resources chasing Warner Brothers Discovery. They were a rival bidder. They walked away, and the market sent their stock higher.
The market basically applauded them for losing.
Which tells you everything about how Wall Street actually feels about this deal. They're not celebrating Paramount. They're celebrating Netflix for getting out.
Okay, that does sting. If you're sitting in the WBD boardroom right now, that's a rough signal to absorb on day one of your big win.
The deal also lands in a market that's already flagging. Deal volume is down 22% year over year. But the mega deals, anything above $1 billion, those are up 57%. So we're doing fewer deals and swinging harder each time.
Fewer punches, more haymakers?
And when you miss a haymaker with $79 billion in debt attached, the analysts who are already whispering about significant layoffs are going to start shouting.
So who actually wins here?
Bankers, obviously.
Obviously. I say that as a former one.
The real answer is we don't know yet. It depends entirely on whether regulators in the US and EU let this thing close intact. And that's going to be a very long, very expensive conversation.
Which brings us perfectly to what else is quietly reshaping the supply chain. And it's happening in Tokyo, not Hollywood. Voices.
Okay, so PwC has been beating the buy and build drum all year, and I keep coming back to that framing when I look at what's actually closing.
Right, smaller targets, faster integration, don't try to boil the ocean.
Which is almost the exact opposite of a $170 billion media merger.
Well, unless you think Paramount just built themselves a streaming platform by acquiring an entire struggling conglomerate.
That's generous. That's extremely generous.
I know, I heard it as I said it.
Here's what I keep thinking about though. Morningstar and Seeking Alpha analysts are describing 2026 as the year of long-term defensive plays. Healthcare, semiconductors, energy infrastructure, stuff that holds. And then you've got this Paramount WBD deal sitting there like
a fireworks show at a funeral?
Exactly. Is linear TV a defensive play now? Is that where we are?
Some people would argue content libraries are infrastructure.
Some people are wrong.
Okay, but
79 billion in debt, Nate. 79. Well, you're trying to merge two platforms that are both already losing subscribers.
I don't disagree on the debt. That's genuinely scary. But the other thing analysts are flagging is deal timelines. Average close is now around 150 days. This thing is going to be in regulatory purgatory for much longer than that.
US and EU both sniffing around it.
And every day that passes, they're servicing that debt load without any of the synergies.
The $6 billion in projected savings sounds great until you model the timeline.
Which nobody wants to do publicly.
Someone should. Speaking of things nobody wants to do publicly, the Denso Rohm situation is heating up. Spill the tea.
Okay, can we just take a moment to appreciate what happened to Netflix here?
They lost a bidding war, and their stock went up.
Their stock went up. The market literally said, thank you for failing.
Which tells you everything about how Wall Street feels about this Paramount WBD deal.
79 billion in debt, Maya. 79 billion to merge two streaming services that are already losing subscribers.
Two services that, combined, still can't touch Netflix, the company they just lost to in the auction.
It's like finishing second in a race and then being handed the trophy anyway. Except the trophy is on fire.
And you have to carry it for 30 years.
The $6 billion in cost savings sounds great until you remember what cost savings means in media.
Layoffs. It means layoffs.
Thousands of them, probably. But hey, synergies.
I will say, and I can't believe I'm defending this deal even a little,
Oh no.
the combined content library is genuinely massive. HBO's prestige catalog plus Paramount's IP, that's actually a real asset.
I don't disagree. The library is great. The balance sheet is a disaster. Those two things can both be true.
Fair.
Meanwhile, over in things that are quietly weird, both Rank Group and Sonoma had management-adjacent insider buys on March 6th. Six-figure euro amounts.
6 figures isn't exactly a ringing endorsement of confidence.
Right? That's like your CEO buying 2 shares to seem enthusiastic.
Very. I believe in this company energy while absolutely not betting the house on it.
Could be confidence, could be the most awkward board meeting in European corporate history.
Honestly, either way, I want the full story. Speaking of full stories, let's get into the deal that actually has my attention this week. Tomorrow's radar. Okay, tomorrow's list is not short.
Never is on a week like this.
Top of mind is Paramount WBD. Regulatory filings are the thing to watch. The EU is going to have opinions and they're not going to be quiet ones.
$170 billion walking into Brussels. That's not a meeting, that's a negotiation.
And deal timelines are averaging 150 days now. So anyone penciling in a quick close on this one is dreaming.
I'll take that bet.
Also watching Denso Rohm. Still early, but Rohm's board has to respond to something formal soon. Either they negotiate or they say no loudly.
My money's on loudly.
And day one biopharmaceuticals. Multi-billion-dollar cash deal flagged with almost zero detail. That announcement is coming.
Sparse details on a pharma cash deal always makes me nervous.
Same. Could be brilliant, could be a fire sale with good PR.
Speaking of good PR, about that $79 billion in debt Paramount just signed up for.